With world-class expertise and local insight, Dexus creates value not just for today, but long into tomorrow.
From Barangaroo Studios, the AusBiz COB is the key stuff you need to know about the day in business and finance.
Welcome to the COB. I'm Juliette Sarli. Nice to have your company this Thursday afternoon, as we see a gain of around 0.2% on the local market. The CBOE, in fact, even higher than that, up by 1/3%. The ASX 200 finishing the session firmer by around 0.2% or 18 points. We saw quite a bit of movement coming through in tech players today, consumer discretionary, and also some heavy lifting by the likes of the banks, getting us into positive territory as well. CBA shares continuing to defy naysayers, up by 1.3%. It was a tech-heavy Thursday, though. We had Xero, of course, one of the front runners on the market, up by an impressive almost 5% on the close, despite a bit of a negative start to the session. Andrew had a great chat with the CEO of Xero earlier. They did miss market expectations with their earnings, but you have seen some very positive momentum coming through in the tech players, really led by Xero today. We also had a labour lift. I was on air when the jobs data came through. It's always a bit like throwing a dart at the dartboard, but wow, more than 4 times more than what analysts were expecting or economists were expecting. 89,000 jobs created in April, most of them full-time, a lot of them female, and potentially a little bit seasonal as well in the services sector, as we saw that very long break where a lot of people had Anzac Day buffeted by the Easter long weekend as well. But the fact that that jobs number was so strong has led quite a few economists to issue some caution against future rate cuts. We're definitely still expecting a 25 basis point cut next week by the RBA, but the market pricing from that has gone from 100% to around 87%. And economists, including Paul Brennan, who I was talking to from Suncorp on set earlier today, suggesting that perhaps you won't see as many aggressive interest rate cuts, given that you are seeing the jobs market so strong. Let's get back to the equity market and have a look at all these sectoral moves. Kicking it off with tech, as we mentioned, Xero really lifting that overall sector, but WiseTech looking good too, with a gain of 1%. Consumer discretionary stocks generally looked positive too, led by Wesfarmers. Aristocrat also having a good session, rebounding from yesterday. And the banks, of course, when CBA goes higher, so does the rest of the market. It was up 1.3% on the close to $169.47, so very much at or near records there. The miners, though, heading the other way. BHP, Rio, Fortescue and South 32, all in the red, even though we did see a tick up in iron ore futures to around $100 a tonne. Having a look at some of these corporate stories, though, Xero missing analyst expectations. However, as we mentioned, the market did seem to like part of the result. IAG, look, it's acquired the insurance arm of the Royal Automobile Club of Western Australia for $400 million, says it will bring about $1.5 billion to its gross written premiums. NRW Holdings going the other way, warning of the South Australian government's intervention to accelerate the sale of the Whyalla Steelworks, saying that that could seriously undermine its claim to more than $100 million owed by the operation. Treasury Wine also under pressure. Change in the C-suite there. Sam Fisher to replace Tim Ford as the CEO of Treasury Wine Estates from October. Ford stepping down after 5 years. And Lendlease down 2% to $5.41. It did, though, confirm it's looking to expand in the UK. Now, of course, one of the major focus for investors in terms of stocks today was GrainCorp. I spoke to the CEO, Robert Spurway, earlier. You can catch that interview online, ausbiz.com.au. But it was also the stock of the day. Now, it declared a special dividend and increased its share buyback after posting a $58 million first half profit. Nadine spoke to Grady Wolf from Bell Direct and Howard Coleman from Team Invest on the call.
What we saw in the first half was their, as you said, guidance upgraded today, which is very rare in this current market environment. The market has responded naturally. We've seen growing interest and growing demand for their crops and the chemicals that they produce. So that's what we like to see for a company like GrainCorp, but we haven't heard from GrainCorp about tariffs. So that would be an interesting one to see what is going on there. I would say on the back of the results, still a hold rating. I'm going with what Bell's had before this, but yeah, I think it's a good tailwind heading into the second half. Right?
Yeah, the trouble with agriculture companies is no matter how brilliant the management is, you're really totally dependent on the weather and on international commodity prices, which are partly dictated by the weather. So, from an investor point of view, how do you really invest in these companies? You can't. You can perhaps trade in them, but you really can't invest, because if you say to yourself, can I be confident earnings per share will be higher in 5 years' time? You have absolutely no idea whether they will or won't.
All right, let's welcome our Thursday guest to the COB, Fraser McLeod, joining us from Shaw and Partners. Great to see you, Fraser. I mean, some big moves on the market, and I know you were zeroing in, so to speak, on Xero. Why do you think we saw such a turnaround, given that its numbers did actually miss what analysts were looking for?
Yeah, well, I think it probably to market it didn't really matter. We've had this furious rally. It's sparked by the tariff calm from a couple of weeks ago, and for many investors, I think for many large institutions around the world, probably caught them off guard. So I think that's got more to do with it than anything. And the scale of the rally that we've seen in just over a month has been incredible. So the ASX on our own domestic market, which you could argue was even a little bit more defensive than overseas, it still had a 15% rally. The S&P is up 20%. If you look at the beginning of the year in comparison to today, well, geez, it's the market's now up, and the Nasdaq's up 30%. So with the rally that we've had with something like a Xero, it's really just a broad tech rally that Xero managed to have. And I think the investors went with buying, say, what is the online accounting leader that has shown lots of growth in previous years. So they went with that and just ran with it. So it's had a massive run. It's now at $182, and probably on the way to 200 would be a reasonable target.
Wow. All right. Well, what about the other big mover? I mean, no matter what anybody says about selling CBA, it continues to defy the naysayers at or near another record today.
Yeah, I mean, I've been a naysayer on CBA for quite a while. It's an incredibly expensive stock. It probably is the most expensive bank in the world on many metrics. If you look at earnings it's almost for many retail investors, it's almost impossible to sell. You can eke away and chip away at a few of them, but everyone's left with a horrible tax problem if you've been holding the stock for a decade or so. And it seems to be one of these core position stocks that if there's a stock in Australia that gets bought first, if you're an overseas investor, it is CBA. And stock's expensive, but even CBA, from the low point, say 5 or 6 weeks ago, it's up 17%. So CBA is an excellent business. It's just what do you pay for that excellent business? They made $2.5 billion on NPAT, and that's still a 5% increase on the previous year. Very hard to sell it, but that doesn't mean that it's cheap.
Another stock that's bounced quite nicely over the past month, even though it is down year to date and down over the past 12 months, is NextDC. We know that the demand for data centres is increasing. Have you been surprised by the turnaround in NextDC or not?
I think, look, again, probably similar to Xero, probably even more so. NextDC is a themed play on AI and data centers. We don't have too many themed plays on AI and data centers that you can, as more of a direct play that you can place on the ASX, but NextDC is one of them. I mean, the stock's up 40%. Goodness me, that's like a return you would get over years rather than a return you would get over just the space of a month. And so I think for those who were too cautiously positioned, it left them feeling very surprised and then chasing. So the rally that we've seen, it's got huge short-term momentum behind it. But I think on balance, we're probably not going to see this rally at the same pace continue for months on end.
All right, it's not a chat with you, Fraser, if we don't talk uranium. Boss Energy up about 93% since April, I believe. Is it still
has been this year has been the most shorted stock on our market, and it's when the stock has now doubled from its low point on the 7th of April. You'd have, if you were holding a short position in Boss, you really would start to try and protect your profits here, and probably that's what we're seeing. We are now starting to see the very, very high percentage short position start to roll over. Boss is a stock that has done everything right. So as the Honeymoon project that they have here in South Australia, the mine is run entirely to plan. There were some doubters on whether they would technically be able to do that, but the management has delivered. And the uranium price in terms of the spot price has also started to recover as well. But yes, we may even see more of a rally there if these shorts really start to get squeezed, which I think is happening.
What about Mineral Resources? And it was interesting earlier in the week, the superannuation fund Hester exiting from that stock.
That doesn't really seem to matter. You see some super funds exiting for more ethical reasons, perhaps, which I don't need to comment on. But the stock's up 85%. It was up on broker upgrades after the analyst call, and iron ore has stayed above $100 a ton, which many people thought wouldn't happen, but certainly keeps Australia's credit card running okay. And literally they are building the road to recovery. They're fixing that the logistics, fixing the road transport, and I think the management were as transparent as they possibly could be within the recent analyst call, and everyone upgraded from there. So it's still a very, very risky play, but are they over the worst of it? They seem to be getting a few votes to say yes. So huge rally in Min Resources, amazing.
All right, Fraser, always appreciate it. Thank you so much. Fraser McLeod, Shaw and Partners, joining us from Adelaide there. Let's have a look in terms of what we saw with the market leaders, and GrainCorp, doing really well on that increased dividend, the special dividend, the share buyback being increased too from 25 to 75 million. IAG buying a insurer in WA up 6%. We talked about Xero quite a bit there. It's up 5%. Alcoa, Fisher and Paykel also looking good. To the downside, NRW Holdings, that was on the mention, of course, of what it could take in terms of that Whyalla hit. Bellevue Gold, quite a few of the gold players under pressure. Treasury Wine Estates as well, a CEO change there. West African Resources. To the upside in the small end of town, these stocks on your screen, including Delta Lithium, up 10.5%. And Strickland Metals among the laggards. In the small end of town, down by 12.5%. Looking ahead to tonight, we do have US April PPI expected to increase by 0.2 to 0.3%. Retail sales could slip by about 0.2% according to economists. The NAHB Housing Market Index for May, and also the big one, Fed Chair Jerome Powell speaking, along with some earnings from the likes of Walmart, Alibaba and Deere. All right, tomorrow, not a lot, but the New Zealand Manufacturing Business Index, inflation expectations across the ditch as well, and Japan's preliminary GDP read. A little bit quiet on the front here locally. The CBOE 200 finishing the day higher by 1/3% despite somewhat of a shaky negative start, while the ASX 200 has closed up 18 points, 0.2%, 8,297 points. Right, that does it for the COB for this Thursday. We'll be back from 9:45 a.m. Eastern tomorrow. We'll see you then.